So welcome everyone to this afternoon's Treasury Talk. As Catherine said, my name is Kristen Morrow-Graven, and I'm from PayPal's Global Core Payments team. What our responsibility is to understand around the world what customers need in every market in order to pay with PayPal. So I'm personally responsible for the EMEA markets and looking to see in each one of those markets, what are the payment preferences? What kind of new payment solutions can we offer there, and how can we then drive consumer preference towards those payment types? We work very closely with Treasury as well, since we have close relationships with our bank processing partners. And so this project kind of touches on Treasury, but is a little bit outside of Treasury in the PayPal world. I'll try and give you a little bit more clarity on that in a minute. Before I jump into the PayPal Fast Facts, I want to tell you a little bit about this project. So over the last year and the first half of this year, I was very focused on our SEPA migration, as I'm sure many of you were as well. And the virtual account project is actually the first project that's gone live post-SEPA migration that required this SEPA architecture that we spent the last year, 2, 3 years building. So we put our blood, sweat, and tears into this project, and some money as well. And now we want to figure out how can we monetize this investment that we made? How can we ensure that we can get something out of the SEPA infrastructure that we've built? And that's where the virtual account project came to being. So before I get into that, I'll just show a few PayPal Fast Facts up here. And I actually just saw that our latest earnings report went live last night, which I haven't updated that yet. So if you want the latest, you can go to the paypal.com website. But as of Q2 2014, we've had 152 million active users around the world. And that's 203 countries. And that means 26 currencies are fully enabled. We also have other currencies as well, some of the kind of long tail currencies which are enabled for other things. So you might be able to buy and sell in those currencies, but not withdraw those currencies to your bank. But we're always working on expanding those numbers, the country presence and the number of currencies. And that's the role of my team, Global Core Payments. We make on average 9.3 million payments per day, just to give you a context of how much business is actually happening. And our revenue in Q2 2014 was just under $2 billion. For last year, it was just over $6 billion for the entire year, so you can see we're well on track to meet that again. We also have, obviously, a big presence in the mobile market. So I put that statistic there as well, because people are always asking what we're doing in the mobile space. How does PayPal work? Let me just see a quick show of hands. How many of you actually have a PayPal account? Many of you, some of you, most of you, I'm not quite sure. But most of you pay online? Do e-commerce shopping? Very good. How many of you with a PayPal account have actually paid with PayPal in the last 3 months via PayPal? Last 1 month with PayPal? OK, not bad. I might have some sales work to do after this. But I just wanted to get a sense of how familiar you were with our product. As you can see from the slide here, we're a closed loop system. In order to start your PayPal account, all you need is an email address. So that's easy. And with that email address and that PayPal account, you can actually then already receive funds. But it's not going to help you so much when you're shopping online. In order to shop online, you need to add what we call a funding instrument. And that's your credit card, your debit card, your bank information. You can even create a PayPal balance, which is the product that we'll be talking about in a minute. That money, or once that funding source is in there, you're ready to pay. So you go to checkout, and you choose PayPal as your funding option. And then simply, with a sign-in of your password and your username or email address, then you've paid with PayPal. The money gets sent immediately to the merchant ships your goods, and PayPal ensures that the money gets to the right place. I want to now talk about this top-up product that I just mentioned a few minutes ago. So for customers who don't add their credit card or their bank information or their debit card information, they might want to create a balance on their PayPal account. Why do they want to do this? Maybe it's a low credit card penetration country. They just simply don't have a credit card, which is very common in Germany, for instance, in Austria. Or maybe they just want to have a lot of control of what's going in and out of their PayPal account. So they create a balance. here's just a quick payment flow of what's happening when a customer pays into their PayPal account and creates their balance. The payer, or the PayPal customer, on the left-hand side here, instructs his bank with the payment instructions to send funds to a PayPal account that we provide them within their own personal account. That information then leaves the payer bank and goes into the clearing system. And that information then moves to the beneficiary bank, or PayPal's bank. And a top-up file is then sent to PayPal, and the balance is created. We also have another product in some markets called Invoice, where a customer can actually pay their online shopping bills via an invoice. And this process also works for that. So you'll see some reference to either creating a balance or paying your invoice. The customer benefits I've already talked about a little bit. It's an alternative to credit card funding for customers who either don't feel comfortable using their credit card online, or perhaps they don't even have a credit card at all. We actually also have direct debit in many markets in Europe, but not in all markets. So for markets where we don't have direct debit options, paying directly with your bank, this could also be an option. In those countries where we do have direct debit, we also have some risk models behind that. So for some reason this customer looks particularly risky, they might not be able to pay with direct debit. Again, this is an option. So it's one way that we can ensure that customers can pay. And it allows a lot of control for those customers. On the PayPal side, the top two reasons here are also shadowed on the other side. It enables more customers to pay, and it offers another additional option when there is no other bank payment for that market. And of course, it's low risk, low cost to us, and for that reason, it's a very easy way for us to enter a new market. Have any of you used the PayPal top-up product in your market? Very popular in Eastern Europe and Southern Europe, in our direct debit markets like France and Germany and Spain and Netherlands, and these countries it's less popular because direct debit is simply faster and easier for most customers. But it is a prevalent way to pay in Eastern Europe and Southern Italy. So, how do we manage incoming payments? Well, this is actually kind of the core of the problem right here, the managing of incoming payments. And I know from talking to a few of you in the break, this is your problem as well. So on the PayPal site, to add funds to your account, we provide a reference ID, or we call it a smart ID. We maybe should have called it something like a not-so-smart ID, because it doesn't work very well for us. When the incoming funds then are received on the PayPal side, what we try to do is auto-match that. We look at that reference ID and try to match to the reference ID within that PayPal account. If it does match, then the funds are posted to the user's account, no problem. But unfortunately, in about 20% of the cases, on average across Europe, it doesn't automatically match, for various reasons I'll talk about in a minute. If it doesn't automatically match, it's queued for agent review. This is a team of people that sit in our operations center, and they try and find some fuzzy logic to see whether or not the name might be mixed around, there might be some address information that we might be able to share, some bank account information that might allow us to match. They try to come up with that fuzzy logic to ensure that that transaction can be matched. So in this cloud right here, you see the match period. Ideally, that would just take a couple of hours, right? Well, no, not so easy on the PayPal side. It actually sits in the queue if it can't be matched by an agent for up to 10 days while we hope for the customer to call in and give us some information that will help us match it. By the time the customer is called in, they're so angry because they expected to have their balance within the next day or so that they're not happy with our operations staff. They've waited 10 days. They couldn't make the transaction that they wanted to make in the first place. So if it gets to this stage, we know it's been a pretty horrible experience. In the case that it does get manually matched, though, the funds do get posted eventually, anywhere from 1 to 10 days later. And if it doesn't match, the funds actually get returned, which means particularly unhappy business customer and lost business for PayPal. Just to give you a sense of how much these matching rates vary from country to country, I pulled out a few countries here. The worst case scenario is Greece. Less than 50%, or actually more than 50% of Greek transactions fail to post automatically. So that means these guys are all heading to this manual queue that could take 10 days. Quite a number of those are actually posted then through the manual process, but there's still a very high return rate. I think of about 20%. In Portugal, the picture is a little bit better. About 40% of transactions fail to post automatically. And in Ireland, it's closer to 30%. And the return rates, again, are significant for us because it means lost business. We've got the German story, which maybe there's some Germans in the audience who can verify this. But in Germany, sending these types of credit transfers is a very common way to pay for your bills, to cover your e-commerce payments. So the German match rate is actually quite good, at I think about 92%. But still, there's room for improvement there. Even with customers who have this really habitualized in their e-commerce and paying preferences, they still can't manage to get that reference information in their credit transfers. So what happens when we try to get this information matched? Where is it breaking down in the process? And we've identified actually 3 different scenarios where something can go wrong. And it really truly does come down to this unreliable payment reference data field. The first bit of it is problem at the payer bank. So if you can imagine going to your online banking portal and you go to initiate that credit transfer, there might be a field for providing that reference information. That reference information, for the most part, isn't mandatory, and some banking portals don't even put that reference information field on their online portal, so the customer has nowhere to put it. They might actually manipulate that information or truncate it when it hits the clearing system, so the process between the payer bank and the beneficiary bank, the information just doesn't get transferred properly. In the second situation, the clearing system actually causes the breakage point. So the clearing system can have the same effect, where they manipulate the data, they truncate the data. There's, of course, the number of characters. There's a limit to the number of characters that can be sent. So if for some reason the customer on the front end side had too many characters, that information just gets lost to us. So when we get a partial reference ID number or smart ID, we just can't match it. And of course, there's the third situation, and that's the lack of required reference information coming from the payer himself. And this could be a case of a customer forgetting to put it into the memo field. It could be the case of mistype, and it could actually just be that the customer misread the information from his PayPal site and translated it wrong onto his bank account. So now I want to get into the virtual account solution itself, and I'll talk a few minutes about the benefits that we've seen from developing this solution. So now that the customer has the virtual account capability at PayPal, he goes to the same page he would before on his PayPal account to see the payment instructions. And now he's going to see, instead of the old instructions that we had, a virtual account number, which is a personal IBAN number that's only used for this particular customer. He doesn't realize that it's a virtual account, and it doesn't matter to him, but it's important to us on the PayPal side for the matching element of it. So in step 1, the customer initiates the payment, and it's received in favor of that particular virtual account at our bank processing partner. The identification of those payments then basically gets booked under the primary PayPal account based on the virtual account number. So again, those virtual accounts aren't individually identified at our bank partner's site. They just do the booking underneath the PayPal account. And you can see that here in the third column in step 3. The account statement is uploaded, and all of the SEPA payments are automatically assigned, no problem. So our manual match rate is basically eliminated. We're up to almost virtually 100% match rate now with this system. In step 4, more on the back-end side, we have the account statements that are accessible to us. So we can filter through various business lines and whatnot and get whatever data we need for our back-end teams. So what are the benefits of virtual account migration? I think you probably hear already where the problem points were and how we were able to fix those. It basically comes down to 3 primary benefits. First of all, streamlined reconciliation process. So with unambiguous identification of the payment source, our matching rate is virtually 100% now. Those manual queues that we had in the past, we don't need them anymore. We can use those customer service agents that were doing the manual matching and leverage them for some other more critical business functions. This streamlined reconciliation process has been a really significant financial benefit for us. we've seen about, I think it's about 6 million additional payment volume from not needing to return payments. So that was in the past foregone business, and now we can really turn that into dollars. On the operational cost side, we've seen a reduction of about $500,000 because of those manual allocations that we had in the past. And of course, this translates into happier customers. At the end of the day, we want our customers to be happy, and they just want to have their money in their account quickly and seamlessly. And that's exactly what's happened with Virtual Account. The remittance field is no longer required, so they don't have to bother trying to come up with these 100 digits of smart ID. I'm exaggerating, of course. They just have to manage the 22-digit long IBAN number. There's quick funds posting, so the money is in the account within 1 to 2 days. And there's no more of this manual matching queue. So customers don't have to sit around trying to decide, okay, do I call the customer service agent or not? And certainly they don't have to wait the 10 days anymore. And for those customers that used our invoicing product, well, in the past, they might have gotten payment reminder emails saying, hey, where's the money? You're supposed to pay this invoice. And if they had already thought they had paid that invoice and then they get this email, that also made some very unhappy customers. So that problem is solved as well. So as you can see overall, between streamlined reconciliation process, reduction in operational costs, and happy customers, the virtual account product has been a true success for us. And we're looking forward to see how it develops in 2015 now that we're 100% ramped with this product.